I'm sure you've all heard that ridiculous saying, marry the house, date the rate, right? How long are you going to have to date that rate for? What is it really going to cost you? So many people are just putting pause on their home search right now because we keep saying rates are going to get lower. We've all been expecting it. All of last year was pretty wild for 2023, and here we are 2024. We get a halfway decent start out to the year and everything starts going haywire again. And the market is just volatile and there's ups and downs, and it's creating a lot of uncertainty. And especially in the news, you know me, I love to share different news articles about how they're scaring people, saying that it's more affordable to rent than to buy. Well, it's all bullshit. Like, it really, really is. If you look at the actual numbers, it is always better to buy than to rent. Again, not 100% of the time. Obviously, there's going to be a handful of situations where it may not make sense to rent. But long term, if you know you need to get into a house and the only thing holding you back is these higher interest rates because you have a little bit of that payment shock, trust me, I hear it all the time. I'm having these conversations with first-time home buyers, going into their very, very first house, looking at the monthly payment, and they qualify, right? Like, hey, congratulations, you are approved for a $400,000 loan with very minimum down. Here's your monthly payment. And it's just like, whoa, like how do we get that lower? So look, we can't control interest rates. There are things we can control right now in this market and things that we can't control. But I want to dive into the numbers a little bit deeper. So that's why I jumped on here. I want to share an article that I found, which I thought was really fascinating. It's sharing exactly what's happening. This is real data, and I'm seeing it as a loan officer. I'm helping people daily. I'm having these conversations, and I'm getting, a decent amount of people pre-qualified, eligible to buy homes. They're just waiting because of the payment shock, and they're waiting for it to get better. So again, let me share this article with you. This I thought was really interesting, so I'm just going to jump right into it. All right, so check this out. This is what's happening in our market right now, right? So 3/4 of buyers have stopped or paused because of interest rates. Look at these numbers. This is out of control. Why buyers have stopped their search or paused their search over the past 6 months. Over 72% of people said it was because of interest rates. That's an uncontrollable item. We can't control what's happening with interest rates. So it just blows my mind that so many people are pausing right now because of that specific thing, but which I get. Trust me, stick with me here. Stick with me in this video. I'm going to share with you the details, and we're going to look at some actual numbers of what it would cost if rates go down 0.5% or a full percent, and it takes 6 months or a year. We're going to dive into those, and we're going to look at all of the figures, because everybody just shares what the monthly payment will be based on today's prices of a lower interest rate. And unfortunately, that's not how it works. Prices are still ticking up. I looked at the data through the rest of this article, and home values are still increasing month over month. Homes are selling faster. There's still an inventory problem. So again, 34% of that being an inventory problem, that makes sense. That there's not a lot of homes available, and sometimes you don't want to just settle for something, which I'm going to disagree with that as well. As a first-time home buyer, you're going to have to settle unless you've got tons of money, your life in a very set place. But most first-time home buyers don't, right? You're in your 20s, you're in your 30s. Your first house isn't going to have everything you want. You're not going to get your parents' house that they raised you in, that they probably took 3 or 4 houses to get to, as your first-time house. It just doesn't happen in most cases that way. You have to think of the long term. The quote that came to mind when I saw this article came out, very first thing that popped in my head, one of my favorite quotes by just a massive investor. I'm sure everybody knows who this is, but Warren Buffett, that in times when people are greedy is when you should be fearful. And only in times of when people are fearful, you should be greedy. When I saw this, it was just like, this is exactly what we're talking about. Like, Warren Buffett is one of the smartest investors. When the rest of the world is saying, no, this is a bad idea, I don't want to do this, that's when he's looking to invest. And that's how he's made billions of dollars. This guy's a multi-billionaire, right? And we're talking on a much smaller scale, obviously. It's the same principle. Everyone is afraid to buy right now because of interest rates. I mean, it shows it right here. It is plain as day. Over 72% of people that are out there shopping for homes have decided to stop because of interest rates. So now we're going to get into a little bit deeper. Let's look at the real math here. So this one I'm really excited about, because what I did was I pulled the data for an existing listing that is actually for sale right now in the Queen Creek, Arizona market, at least as of me making this video, which is April 19th. I just made this up. Hobie Homeowner's not a real person, but I thought it was a pretty dope name. Let's look at the math from buying now versus waiting a year. So again, this is our overall snapshot. You can see right now, by buying now, even with interest rates higher, You save tangible dollars of just under $12,000. This is factoring into if we refinance a year from later if rates drop. So if we buy now and refinance later, it will still cost you $12,000 less than waiting an entire year and buying that house then when interest rates are lower. But the one thing this thing doesn't factor into, and I haven't dove into it fully yet, but it doesn't factor into everybody else that was waiting for interest rates to drop. Because guess what? Those are now more people. What does that make? We talk about it all the time. Supply versus demand. More people want it. There still is not enough homes. What do you think that's going to do to the sales price? Yep, you're right. It's going to jack it up. So I'm using a very conservative appreciation gain. They gave me a few options as far as where we think home values will be a year from now. And I put in just really conservative numbers. We're talking about like a 4.46 increase in sales price over time, which in this area is probably gonna be more than that. But again, I'm giving everybody the benefit of the doubt here. I'm trying to put the numbers into like worst case scenario to show you that it truly is better to buy now instead of waiting to actually wait for those rates to come down. We don't talk about appreciation gain. That's the home value. So this kind of shows it, right? You can see, obviously, we have an upward spiral in the value. And then, yeah, your payment difference is going to be lower. If you wait 6 months, your payment is going to be $135 cheaper next year, right? So what's the problem? Again, let's look at the math. So today we have our property value. This house is listed for sale today at $389,900. So, call it $390. I love how they come up with these like, $10 off, $100 off to make it look a little pricier, but I get it. I'm not a realtor, but good tactic. So I've factored in, just a standard FHA minimum down. This is not one with down payment assistance. I threw in some seller paid closing costs just to kind of give us an idea of what it would cost you. Because again, this program, if we did do down payment assistance, the assistance would cover all of this. So if you don't have $12,000 to $13,000 for a down payment, don't worry about that. I've got programs that cover it. This, again, is just going all the basic numbers. No matter how we slice it, I'm looking at a 7% interest rate at this sales price of $389,900. As opposed to waiting 6 months, we all know the price is going to go up. So we're figuring 2%, right? Half of, just about half of 4.4, 2.2. So that goes up, increases your down payment. Even if rates drop to 6.5%, guess what? You're still spending almost $500 more out of pocket. And again, the payment difference is not anything crazy over 0.5%. Full year, guess what? That house for $389,900, now it's going to be $407,000. Obviously, this house probably is not going to be available for sale a year from now. It's going to sell, but you get the idea. Overall home values, this specific home, conservatively speaking, is going to be worth over $407K next year. Again, which increases our down payment. But guess what? Rates dropped 1%, it's still going to cost you almost an extra $1,000 more out of pocket. So this is exactly the concept I want you to understand here. The supply versus demand. If everyone's waiting for rates to drop, guess what happens when they finally do drop? That's just more and more buyers that are entering the market. Because guess what? With every 1% interest rate drop, every 1% drop, 5 million more people qualify for mortgages. I'm doing mortgage applications right and left right now. And not everybody qualifies, but we put them on a plan. We show them what they could qualify for, or maybe sometimes what they qualify for isn't really worth anything, so they give up. For those of you that really do want to own a home, I promise I can make it possible. I've done it for myself. This is how I've been able to build my wealth, how I've been able to set my family up for success. And honestly, real estate has been the saving grace for my family in these tougher times when things are more expensive. I'm sitting on tons of equity with the properties that I own, and I've been able to tap into that, and it's been able to help me in many, many different ways. But it's all about getting that first house. And so if you're held up on interest rates because of where they are and you're wanting to just wait for them to drop, just know it's going to get more expensive the longer you wait. I have these conversations with buyers year after year after year. I've been doing this almost 10 years. And the one consistent thing is,
I should have bought when you told me to, Braden.
Because guess what? If we do an application and you qualify, you're good. I promise you can afford that loan. Mortgage loans are not like auto loans, right? You go to a dealership and they have big old GMC truck, fully lifted, 2500 HD, you're pricing it out with all the options. I mean, that thing's gonna cost you 80, 90 grand. You make 40K a year. They don't care. They're not looking deep into that, looking at the credit score. They're gonna make sure you qualify, and they're just like, sounds good, whatever, right? Auto loans are a problem. That's one of the biggest knockouts of why people don't qualify for as much, because of these fat auto loans. But guess what? With a mortgage, it's different. I am analyzing your entire financial picture. I'm looking at literally everything. If you don't qualify, it's because you can't afford it on paper. And again, I know there's a million different situations. Sometimes on paper, it doesn't always work. But if you're a typical W-2, got a regular job, pay stub, I am looking at everything. I see the debts that leave, and we only qualify you based off of a certain debt ratio percentage. So I know you're going to be able to pay that loan back. It might be tight, and I get it. I remember going through this payment shock when I bought my very first house, and prices were way cheaper then, right? Like I would love to buy the house that I bought when I was 23 years old 10 times over right now because I have the money to do it now. But back then I was broke. I was a lead teller and then a banker. Like I was not making very much money. And the payment, even though it wasn't high, like, by today's standards, for me, for someone that didn't really have a whole lot of money and was not very good at saving, and I hadn't figured out budgeting and all of that stuff, my credit was honestly kind of a mess. Like that really set me up for success. And I remember freaking out about that payment, and everybody told me the same thing. Like, well, you can always refinance, you can do this and that. And I was like, all right, well, I'm gonna take the leap, right? I'm in my 20s, whatever. What do I have to lose? It was a good deal. I had to live somewhere anyway. I had a bad roommate situation, so I had to move. So I ended up buying this house. And honestly, it is what changed everything for me. And I didn't buy it at a great time. I lost home value for the first 4 years that I lived in it. So when I refinanced, I couldn't even do like a regular refinance because I didn't have enough value. I had to do an FHA streamline one where they didn't require an appraisal to drop my payment down a couple $100 on like year 3 because I did a 2-1 buy down. So again, all of these things that I'm sharing, it's because I've done them. It's what's helped set me up for success and made me where I am today. And you can do the same thing if you just focus on the long term. If you apply, or if you're curious to see what you could qualify for, let's do it today. There's links right here within my website. You can go online, you can put out an inquiry. If you're not quite ready to apply yet, you've got some concerns, give me a call. You schedule 10 to 15 minutes with me. We'll go over all of your concerns, what you think the problems might be, because I promise you, if you know homeownership is important, the longer you wait, the more expensive it gets. I've shown you the numbers here. The concept is universal. Supply versus demand. Stop waiting around, because the longer you wait, the more expensive it's going to be. And the sooner you can get into home ownership, the sooner you can start building wealth. And it opens up options because of things like equity and good old mortgage math that we can play with to help pay things off. And it gives you tools to help use the equity to improve the home or pay off debts or things like that in the future. Like it is the number one hedge against inflation. Right now, interest rates are high because inflation is high and they still don't have it under control. But you know what the number one thing that offsets inflation more than anything is home ownership. So the problem to interest rates is the solution. Like you need to buy the freaking house. It's gonna set you up for success. So stop waiting, get on my website, shoot me a calendar invite, and we will chat for 10, 15 minutes about your situation, figure out how we can make you a homeowner today. I don't care what your situation is. I've got everybody set up on plans. Sometimes it might take a month, it might take a year, it might take 2 years. You might be eligible today. You might be able to qualify for down payment assistance for less money than you thought. I'm talking less than $1,000 in some cases to purchase a home, to start building equity and start building wealth for yourself. Get off the fence. Don't be like these 73 other percent. It is time for you to get your piece of the pie. Time to be greedy when everyone else is fearful. Listen to Warren Buffett. Pretty good idea to take advice from a dude like that.